Going up today. Stocks continue to rise. Small caps hit a new all-time high. Market risks to watch in 2026. More big developments for crypto. Inflation report on deck. And why most investors don't understand what's really coming. It's another great day, guys. Let's go. And so it was a rather flat day looking at the heat map here. Not a whole lot going on the surface level of the big indices. However, it was a very important day looking underneath the hood at high beta names, small cap growth stocks, printing that big green candle that I've recently been looking for. Meme ETF up 8.79% today. In addition to the Russell 2000 small cap index, once again leading the charge and actually printing a brand new all-time high today just by a few ticks. But like I said yesterday, I was really looking for these smaller hot stock to bounce up off the lows after they did look like they had been finding support. And that's exactly what we got here today. New Scale Power, like I said yesterday, was setting up for a good bounce, up 13.4% today, and many other hot stocks this year. Printing nice green candles there today on volume. Rocket Lab, up over 10%. AST Space Mobile, 18%. Rigetti, 15%. Bloom Energy, another 15%. As did Big Bear AI, Archer Aviation, battery stocks, and rare earth. A lot of these sectors having been knocked down heavily the last month and a half, really showing some good technical signs today. Along with a continuation in robotics stock after we got that big news yesterday. And another retail favorite, Unipath, rocketing up 24% today after coming through with a pretty solid earnings report. And they're quickly becoming an important business, an agentic AI application layer, leaning into robotics. So this was all really good price action to see across the small cap growth space today. And to my surprise, there was actually a lot more bulls than bears in today's AAII Investor Sentiment Survey. Saw quite a sharp flip there after it had been heavily more bearish for a few weeks here. Now all of a sudden, a lot of investors are feeling better. Did we just see the bears capitulate? After they've been out beating their chests, saying the AI bubble had burst 2 weeks ago. They all seem to be really quiet now. And it's interesting because it's actually the first time in 44 weeks that AAII bears reading fell below 31%, something that's rarely happened before. But when it does, it usually produces really great forward returns, even starting 2 months out, markets higher 100% of the time, and especially a year later, 23% average return. Basically showing when a lot of people have been bearish for a long time, then all of a sudden they capitulate and kind of throw in the towel. It can often lead to higher returns. And so it's pretty hard to fight markets at all-time highs now with the small cap index having broken out today. Like I said, really setting up for a great 2026. My stock picks portfolio actually had the best week ever last week since we started last year. That's why I gave everyone a chance to buy the dip. So congrats to those that did get in. But that AAII Investor Sentiment Survey is just one reading of many out there. We've still got the Fear and Greed Index in the fear zone. Hasn't even made it back to neutral territory yet. As there's still plenty of people, in fact millions, that are still pessimistic, still have low expectations, and aren't feeling that great. And that's why we've got a massive divergence between the soft data and economic hard data, what's actually happening in the economy. With plenty of bearish and pessimistic sentiment across mainstream and financial media. 4 reasons the economy's worst case scenario could be looming in 2026. People still talking about stagflation, inflation running hot while economic growth slows. Some people still think tariffs are a big risk to the economy and markets. High housing costs, even though we've been seeing signs of shelter inflation come down a lot. Sticky wage growth, even though average hourly earnings are still growing above inflation. And tariffs, which some people are still hanging on to as a big risk. It's interesting now because some big investment research houses like Apollo just listed their top 5 economic and market risks to watch in 2026. Interesting to note, the first risk they see is the US economy resuming upward momentum, thinking economic growth is likely to pick up again as risks from the trade war are fading and the one big beautiful bill is likely to boost demand. So we've now got big research houses saying the biggest risk next year is things keep getting better. And I think they list that as a key risk because that is an actual risk for a lot of investors out there who are on the sideline. Number 2, global manufacturing upswing drives more growth. The global industrial renaissance boosts global growth with more and more countries focusing on home shoring, advanced manufacturing capacity. And again, the new Fed chief politicizes monetary policy because keeping rates on hold wasn't a political move, but now cutting them will be. And of course, the AI bubble could burst. We've been hearing that the entire AI bull market, no doubt we will continue to do so. And fixed income supply could surge, when in fact the federal government has actually been running a budget surplus the last couple of months, meaning they don't need to issue as many new Treasury bonds to fill the void. And in fact, what they won't tell you is they're using that stronger fiscal position to actually buy back debt, not issue more. The US Treasury has been hitting records with buying back billions of dollars of national debt. A small start, but no doubt a step in the right direction. But don't be fooled, there's still a huge amount of debt accumulated over the past 30 years that the economy needs to outgrow to really get a hold of. That's why this admin's focusing on pro-growth policy. And that's why I think most people don't understand what's coming next year. Plenty are still hanging on to the theory of Orange Man bad, as they've been completely brainwashed by dying legacy mainstream media. But putting Scott Bessent as a Treasury Secretary, probably the best Treasury Secretary the country's ever seen. Ex-hedge fund guy who understands finance really well, very pro-growth, also as a top economic advisor, combined with the likely incoming new Fed chair, Kevin Hassett, isn't just about tweaking policy. I think it's a full revolution of how the Fed fits into the whole picture. Instead of being completely independent, they're now coming closer in line with the admin, which no doubt is controversial, but I think it's a smart move, so they're all on the same page and can join hands to engage in a coordinated, top-down macro policy, manage debt, boost liquidity and growth simultaneously. As they all know, the massive debt load they've been handed needs to be outgrown with growth-first policy, and that means easier financial conditions. 1% interest rate sounds crazy to a lot of people, and no doubt it could come with some inflation risk, but it could also unleash a huge amount of growth, increased revenue for the government, which can fund stimulus to give low-income consumers a helping hand. And of course, for us investors, it's very supportive of risk assets, growth stock, small cap, Bitcoin, while likely penalizing anybody holding cash. And like I've been saying for a while, kind of forces you to own asset or risk getting left behind and becoming another crying bear. But expect the mainstream media keep doing their best to keep you scared out of the market. In addition, trying to shoot their home team in the foot, not seeing the big race with China, and not seeing how much potential there really is that can be unlocked for everybody's benefit. But the numbers don't lie and the market doesn't lie. And that's why I think 2026 could be setting up for a great year. Even the Fed themselves think the US economy is currently growing at an annualized rate of almost 4%, but it doesn't feel like it, does it? Listening to the media, there's always impending doom. Even though consumer spending and retail sales are breaking out to multi-year highs, currently on a record holiday spending season, and the price action, small caps hitting a new all-time high, which I really feel like a lone wolf talking about. No doubt doesn't garner as much attention as saying everything is on the edge, about to crash, look out, be careful. But like the old saying goes, bears sound smart, bulls make money. And that's exactly what we've been doing this whole year. As many of you guys know, I run 6 portfolios. My long-term portfolio, where the bulk of my wealth is, my retirement portfolio that I've shared on here before, my stock picks, ETF, and options trading portfolio that I run as premium services, and lastly, this one, a portfolio I started late last year to make investments in key themes that I see developing that I've shared on here this whole time, including Rich Tech Robotics, which I started buying early this year. Recently buying the dip on a few leveraged crypto ETFs. And since October last year, this account's performed really well, up 76% on what I've invested in it. And if things go the way I think they could next year, I expect this account to turn into $1 million US plus. And since Trump is in office to January 2029, I think the bull market could very well run hard into 27, 28, potentially into the 2030s, especially if JD Vance gets in after the election in November 28. And so whilst a lot of people worry about the market falling 20 or 30%, that doesn't really bother me. I'm more worried about missing out on 200 or 300% upside gain. And that's the way I've positioned this portfolio to fully participate in this bull market. But like I said, I have a really small YouTube channel in comparison to many other FinTubers out there, which I've got to be honest, I struggle to watch. I can't see any signs that they actually trade. They're constantly playing it safe, sitting on the fence, just echoing each day's price action, spreading fear. But that's what seemed to really work well on here. And so one of my goals this year that I've yet to hit on is 25,000 subscribers on YouTube. So if you watch this show, you get some value out of it, and you'd like to keep me motivated to keep turning up and spending 5 hours each day making these videos, then I'd really appreciate it if you went ahead and subscribe to this channel. And then these videos will show up in your feed each day. And instead of getting brainwashed with fear, you can actually get what's really happening out there presented to you by somebody who actually trades, does this stuff for a living, and puts his money where his mouth is. Which, as far as I can see, all the other daily market review FinTubers don't do that. So a big thanks to everybody who supports this channel, and I hope my content actually helps you make more money in the market. And even no doubt we're going to have plenty more bouts of market volatility, pullbacks, corrections, even a bear market for a year or two. I agree with Nvidia. AI is not another tech cycle, it's an industrial revolution, as consequential as electricity. With this post they shared on their X channel today. So I still believe there's heaps of opportunity left going forward, not just in AI, but in robotics next, but of course, it's just more popular to hate on it, especially with this admin. However, I've found not having TDS can be quite profitable, and I expect that to continue for another several years, helping to unlock these important industries with robotics being a focus of mine. In addition to AI, crypto, nuclear, batteries, rare earths, a lot of great themes out there. And we could very well be seeing screenshots like this come this time next year. People just ordering their optimist, but I don't think a lot of people have really imagined it yet. Imagine having one of these things in your house the next couple of years, being able to do general housework for you. I think it's pretty cool if you ask. And I plan on using some of my profits from being invested in Tesla to buy one myself. But pay attention to a lot of these companies going into next year and beyond. It's not just going to be Tesla. Many companies are going to help to make up the robotic landscape, as there's not really that many, especially those just focused solely on robotics. A lot of them just have a robotics division. But it's not just robots. I think the face of finance is changing, especially just this last week. What a torrent of announcements we've seen. Just a couple of weeks ago, JP Morgan was talking down strategy stock, hinting that MSCI may exclude them from their indices. I think that just sets up a smart move for Standard & Poor's to include them in their S&P 500 and differentiate themselves. But anyway, now all of a sudden, JP Morgan's backflipping just after the NASDAQ increased the options limit from 25,000 to 1 million contracts on the BlackRock Bitcoin ETF, basically opening the doors for big institutional money to come in and offer structured products. That's exactly what JP Morgan did. The week after they were talking it down, now they're coming out with a $170,000 price target in the coming months. Bloomberg just announcing live on TV that Abu Dhabi just bought over $500 million worth of Bitcoin. Larry Fink, CEO of the world's largest asset manager, BlackRock, coming out again today saying that sovereign wealth funds are buying Bitcoin. The International Monetary Fund coming out and talking about this. Stablecoins have the potential to reshape cross-border payments and capital flows. Also posting today, stablecoins could simplify remittances and payment, calling for regulation, showing that stablecoin cross-border flows are growing faster than native crypto asset. And the biggest development from today, the Commodity Futures Trading Commission announcing that spot Bitcoin and other cryptos can now trade on CFTC registered exchanges for the first time in history. Another monumental change in crypto today, effectively opening the floodgates for mainstream compliant institutional grade Bitcoin trading. A regulatory green light of this scale is something markets have waited over a decade to see. It's been a big hurdle for its growth. And now trillions of dollars of money and pensions, insurers, asset managers, banks can legitimately allocate to crypto. Bitcoin is now on the same regulatory level as gold and oil. Again, the SEC joining hands with the admin to make the US the global leader in digital assets. Something the president has repeatedly stated time and time again, creating a big differentiator with China, who don't want a bar of it because they cannot control it. They're obsessed with having control. Interesting to see on the CFTC website today, they said themselves, federally regulated spot crypto markets open a new golden age for innovation in America. And so whilst you can already buy Bitcoin ETFs on regulated exchanges, the Bitcoin inside those ETFs comes from unregulated crypto markets. So this CFTC decision is a game changer. For the first time ever, spot crypto itself can trade on fully regulated US exchanges like the CME, CBOE, and NASDAQ. Just like S&P futures, institutions can now trade crypto directly, not just an ETF. Banks and pensions that were legally blocked can now participate. The underlying market become federally regulated, getting fully integrated into the US financial system, not just wrapped around it. And so just think about the changes we've seen this week. Vanguard, largest retirement asset manager in the States, opening the doors to crypto ETFs to their 70 million clients. Second largest bank in America, BOA, recommending 4% portfolio allocation to crypto. Charles Schwab just coming out announcing plans to offer crypto trading early next year. JP Morgan backflipping, BlackRock talking it up. Now the Commodity Futures Trading Commission approving spot trading. Looks to me like all levels of government, along with Wall Street, are joining hands to put a floor underneath this. The next big shoe to drop would be the Trump admin announcing they're buying Bitcoin and Ethereum as part of a national strategic reserve. If that would have happened, I think we could see crypto up 10 or 15% on the day. And like I said a few weeks ago, it would have been a great time for them to buy the dip. Maybe they could have started a position, or like I said, if it got any cheaper, it would be a great time to step in and support it. Just like basically all of Wall Street is doing right now. And why I myself, just like I told you guys back on the 1st in late November, was buying the dip myself on the leveraged strategy ETF, along with the leveraged Bitmine Emergent Technologies, the largest Ethereum Treasury holding company as well, like I said, on the 1st of December. And I initially thought I may only hold for 3 months, but now I'm thinking I could hold going into 2027 or even 2028. I think all the stars are aligning for potential big moves next year that I really don't want to miss out on. Otherwise, just wrapping it up with what's up on deck. PCE inflation tomorrow. All indications say it should be tame. Trueflation got it running around 2.5%. Bond and volatility markets not pricing in any big surprises either. Fed Fund futures still think almost 90% chance we do get a rate cut next week. That's really what's helped the market bounce back of late, which looking at the price action in the 2-year is what we should get as well. Still a bit of a gap there between where the Fed's at and where the bond market's at. Fixed 9 days still quite low here, 14.3. Volatility being sucked out of the market. But the most notable thing for me today, like I said at the start of this video, was the big bounce back in high beta small cap growth name, increasing the chances we have seen a low just like crypto. And there's actually still quite a long way to go for these names, along with crypto, break out to new all-time highs again. Just as the leading Russell 2000 small cap index did so today. And that's a wrap for the daily market review today. Thanks very much for tuning in. My name's Jared, and I'll see you back here again this time tomorrow.